Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello, golden friends. Looking at the daily, weekly, shorter term time frames, some more inside candlestick action on gold. Tightening range is forming on the daily time frame, still back and forth with this 200-day moving average resistance. A little bit of an upper wick of profit taking, and you can see the range tightening each day, tighter and tighter. We could see a clear break tomorrow. The bulls want to see a close above 1275, which has rejected the price a few times in the past 2 weeks. We're holding the 10-day moving average support. That's currently at 1265.35. Weekly time frame does look like a bear flag unless we can get over that 200-week moving average resistance of 1275.43. Little weak bounce after the big dump. Could be headed to further downside. Decreasing bull volume, also a red flag. So there are definitely signals on the bull miners weekly time frame and gold weekly time frame that have me aware we could be headed back towards the lows over the next 2 weeks. We need to see the bulls break the high of October 5th in order for this play or for gold to see further upside. And that level here on XAU USD is up at 1277.16. And for other different tickers, we're looking up at 1279. But either way, it's in the upper 1270s and it must break. So today we did see some upside. Big reaction to bull reaction to data this morning that quickly dumped. And that's a common theme these days. As long as gold has been weak since that big time dump weeks ago, these little short-term spikes are met with big bearish action. So we did recover from that. Bulls are trying to get back into the 1270s and struggling. I want to point out a trade opportunity today that's set up with the hourly inside candlesticks. The range of this candlestick was inside the previous, then another one inside that one, tighter and tighter. Bullish break leading to some upside. And you look at this on the hourly and say, so what? We saw a $3 move to the upside, big whoop, not much trading opportunity. But let's look at the 5-minute chart for NUGT. We had a clear tightening pattern. Here's our low and our high on the bounce. Higher low, lower high, higher low, lower high, tight, 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 tight. There's your break right there, spike in volume. Look at this volume very clearly decreasing, tightening this range up on the 5-minute, and there's your clear signal. Let's say you got the worst entry on that candlestick. You spill your coffee and you're waiting for the move and you're filling out your order now. In reality, you should have been in this move as soon as 1280 broke, which was this little high here. But let's say you got in at 1288 due to some other factors. And then over the next 30 minutes, we see a move up to 1313. So that is a 25-cent move. And if you're trading 1,000 shares for a $1,300 position, you just made $250 in a half an hour. And if you hit base hits like that every day, those gains add up. So it was a trading opportunity. You didn't have to play any of this downside. Of course, it was very clear bearish downside with the bear miners having a really nice opportunity the first half of the day. But let's say you just had that one trade. There's $250. And that was indicated on the clear break of this 5-minute. And then you go and look at gold. And right after that 5-minute break on NUGT is when gold broke that inside candle to the upside. And then we saw that little follow through. So that little follow-through gave that minor NUGT and JNUG the momentum to the upside for that half an hour bullish trade. So let's look on the daily time frame at those miners. Lower highs and lower lows, not a good sign. Pulling back, increase in bear volume, and this is not the follow-through that the bulls were looking for after trying to consolidate and head higher. So the bears are showing strength here, and this is what I'm talking about on the weekly time frame. A bear flag looking pattern, just like gold on the weekly, is forming on these miners, both JNUG and NUGT, which means for Dust and JDST, it does appear to be a bull flag. Not as clear because the overall bearish trend certainly doesn't make it look like a bullish pattern, but it definitely looks like a bearish pattern on JNUG and NUGT. So we'll see how we end the week. Gold and the upper 1270s are the goal for the bulls to get over, and there will be a big sigh of relief if we see gold in the 1280s in the next week or so. So that's what we're watching. Protect those profits, protect those losses even. If you are in bull miners and you're stuck in a position and you are in losses, set some stop losses because it could get worse. So we'll see what tomorrow brings. Let's look at that gold hourly again. Support is down at 1265.98, and then a must-hold level 1264.59, and clear resistance in the low 1270s, and then in the mid 1270s from back yesterday. So we'll check in tomorrow to see how the week wraps up. I appreciate you watching. I hope you have a fantastic night. See you tomorrow.